George, good to have you with us on Bloomberg.
Thank you very much.
Now, how long have you been doing this?
Oh, let's see. 1966, I became a member of the New York Mercantile Exchange.
1966.
That's right. That's why I bought
Were they
my
still
first
using
seat.
pencils? Were they still using
Oh,
pencils
they
and
were using
handwritten
pencils,
order sheets?
And we had a chalkboard.
A chalkboard.
Right, and we also took Polaroid pictures of the boards to keep records.
All right, now one thing, all right, Polaroids may have gone away a little bit,
Yes,
as well
they
as the
have.
chalkboard and the paper trading
that's right.
slips. But one thing that doesn't seem to ever go away is people's love of gold. What is it about
Yes.
a metal that really has no other use other than for jewelry, although that is a big use, but it's jewelry, or as in many people saying that it's a replacement for fiat money?
Well, yes, it is. And actually, if you go back more than 5,000 years, gold
That was way
coins-
before you were trading.
Yes.
Okay.
Although a lot of people don't believe that.
Oh, we do. So go back, you say, go back 5,000 years.
5,000 years and gold coins, and they were really currency, and people have always had faith in gold coins. In fact, if you wanted to buy barley or wheat or corn or anything over the years, potatoes, you had to have gold coins because people had a major distrust for paper money.
Do you think that we're headed in the same direction?
Well, we certainly are headed in somewhat of that direction, but not quite, because today paper money has gold backing. But back then, kingdoms or fiefdoms just issued printed money at will, and it did not necessarily have a backing. And so people distrusted paper money as they went from land to land, and they decided to just hoard gold coins, which they always knew would have a value. And indeed, in 1932, the Depression, a kilo of gold, 32 some odd ounces, bought you a new Ford, Chevy, or Plymouth. And today it does the same thing.
Well, is this
Except
something
the
that
names could be different.
The names are different, of course, but is it also a factor that the government could unilaterally pass some kind of law or legislation that bars private citizens from owning gold, or indeed
And
even,
indeed it happened.
And we closed the gold window under Richard Nixon.
That's right. And it wasn't until December of 1974 when we started to trade gold futures contracts here in New York on the COMEX. Up till then, you had to trade gold, if you could, either in Winnipeg or in Europe.
Now you've got, as you said, about 4 decades worth of, a little bit more than 4 decades worth of experience in this market. Have you ever seen such a sustained and bullish voice for gold, not only for professional investors, because we know that John Paulson, hedge fund fame, is a big investor in gold, David Einhorn,
and others, George Soros,
David Einhorn, but also you can't miss the advertisements for people to turn in their gold jewelry.
Correct.
Have you ever seen a situation like this before?
Actually, yes. Not quite like this, but in the 1980s, we did have a big jump in gold. Don't forget, not so long ago, back then gold was trading at about $350 an ounce. Today, it's trading at $1,400 an ounce.
So what happened in the 1980s after that?
In the 1980s, what happened is people then also were afraid of the U.S. dollar. And they were selling the U.S. dollar, but they were buying other currencies and gold. Today, there seem to be very few havens in the currencies. Well, what's happened...
Maybe just the Swiss franc, at least at the moment.
Well, a lot of currencies disappeared into one currency called the euro.
So what happened then?
So what happened then, people at first, the euro was then, say, 95 cents when it got started against the dollar. Today, it's about 132. But back then, people said, gee, we don't think the euro is really going to work well, because it seemed that country A would not want to have the wine or the cheese from country B, and vice versa. And so they weren't homogeneous countries, and they had different agendas and purposes. But then the euro stayed, and it worked. And people began to invest in the euro. And the euro, at one point, climbed way over the U.S. dollar not too long ago.
141
exactly.
At one point. But what happened to the price of gold? I mean, just to give that historical connection.
The price of gold started climbing. As the dollar declined against other currencies, people said, gee, what will my dollar buy me in the future, and what can I buy to maintain my purchasing power? So people started to buy gold. And of course, as the price of gold increased, it dragged up silver. Now, back then, copper also had a shortage. There was a shortage of copper for infrastructure, and banks were giving you an extra penny. For $1's worth of copper pennies, you got $1 and a penny in dollar paper currency.
By turning in your pennies to the bank.
Turning in your pennies to the bank, because everybody needed copper. And at that time, people said, gee, there's going to be a major copper shortage, but it did not last long.
So the price of copper fell.
The price of copper fell.
What happened to the price of gold, though, when you compare it to what happened in the early 1980s?
The price of gold also went up.
And then?
And then, as it started for a 10-year decade in the 1980, there was another investment darling, which was the dot-com era, and gold languished and did nothing. And gold stayed pretty much the same price.
So do you think that's likely to happen now?
It could. Yep, it could stabilize, and currencies could stabilize, in which case you'll have small fluctuations going forward and stability. And people actually will prefer stability to the volatility that we see now.
Right, because indeed, if you're looking for gold as a way to store value, you don't want a lot of volatility because that is going to exacerbate the very conditions that you're trying to avoid.
Of course, and what you are buying the gold for essentially is to maintain purchasing power. You're not buying it as a collectible, although of course some ETFs are taxed as collectibles.
Well, mention that because that's an interesting point, because taxing collectibles is different than taxing capital gains.
Exactly, and that's a very big difference.
GLD, which is the much noted exchange traded fund on gold,
is taxed as a collectible. IAU, the COMEX 100, is taxed as a collectible.
Yeah.
And there are some that aren't taxed as collectibles, and some have offshore or overseas delivery points.
Because this tax as collectibles is only applicable to U.S. taxpayers.
Only to U.S. taxpayers. Indeed. That's right. But if you bought it in a tax-sheltered account, a 401k or a retirement plan, you don't worry about the tax.
Until you actually withdraw the money as income.
Withdraw the money by selling the asset.
All right. So let's take us through some of the other metals, right? You think gold could stabilize here at around $1,400 an ounce. What about investing in silver? I think silver also could stabilize somewhere around $30 an ounce. If you recall, silver did run up to $50 an ounce back in the 1980s during the Hunt brothers,
when they thought that they believed very strongly that the price of silver is going to outpace the price of gold. They accumulated a tremendous amount of silver.
Need your thoughts on copper, though, as well.
Yes.
Copper.
I like copper.
You like copper a lot more than either silver and gold?
Copper has a real disappearance. You can look up at the ceiling and see all the electrical wires. You need copper. If you have building and you're building more, you need copper. You need it for infrastructure, and it disappears. However, this is interesting. People forget about platinum and palladium.
Both tied to the catalytic converter market and automobiles.
And also the catalyst for crude oil to become heating oil and gasoline.
In refineries. We're going to leave it there. George Gero, RBC Capital Markets. Thank you very much.